Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 9th, 2026, and we're diving into FuelCell Energy's latest earnings report for the first quarter of fiscal 2026. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. FuelCell Energy has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. FuelCell Energy reported a revenue of $30.5 million for Q1 2026, which is a 61% increase compared to the same quarter last year. John, what are the key drivers behind this impressive growth?
Absolutely. The significant revenue growth is primarily driven by increased product revenues, which jumped to $12 million from just $0.1 million last year. This was largely due to long-term service agreements with companies like Gyeonggi Green Energy and CGN Yulchon Generation in South Korea. However, despite the revenue growth, the company reported a net loss per share of 49, which is an improvement from 142 last year.
And what about their backlog?
The backlog stands at $1.17 billion, down about 10.8% from last year. This decrease is mainly due to revenue recognition over the past year, but it still represents a strong pipeline of future revenue.
Operational efficiencies and future outlook. FuelCell Energy has also reported a loss from operations of $26.3 million, which is an improvement from $32.9 million last year. Can you tell us more about their operational efficiencies?
Sure. The company has managed to reduce its operating expenses to $20.4 million from $27.6 million last year. This was achieved through a decrease in research and development expenses and administrative costs, thanks to restructuring actions taken in the past. CEO Jason Few highlighted their strong revenue growth and sharpened operating discipline, which are crucial as they position themselves for future opportunities, especially in the AI-driven data center power market.
What does this mean for their future outlook?
FuelCell Energy is focusing on converting their robust pipeline into definitive agreements, particularly in the data center space. Their collaboration with Sustainable Development Capital LLP is a step in the right direction, targeting up to 450 megawatts of identified projects.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 68 cents for this quarter, but FuelCell Energy reported an actual EPS of 49. John, how significant is this beat?
This is quite significant. Beating the forecasted EPS by 19 cents indicates that FuelCell Energy is managing its costs better than expected, despite the challenges in the market. This positive surprise can boost investor confidence and potentially lead to a more favorable market reaction.
And how many analysts were involved in this forecast?
The forecast was based on estimates from 2 analysts, which suggests that while the coverage might be limited, the company has outperformed the expectations set by these experts.
Key takeaways. In summary, FuelCell Energy has delivered strong revenue growth and managed to beat EPS expectations for Q1 2026. With a focus on operational efficiencies and strategic partnerships, the company is well positioned for future growth. John, any final thoughts?
FuelCell Energy's performance this quarter is a testament to their strategic initiatives and cost management. Investors should keep an eye on their progress in the data center market and their ability to convert backlog into revenue.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on FuelCell Energy's performance in the comments below.